Over $2.17 trillion is laundered globally each year, and some of it funds terrorism. So, what can internal auditors do about it? Welcome to the GRC Sentinel. Today, we dive into the critical but often underappreciated role of internal auditors in preventing money laundering and terrorist financing. While banks and law enforcement play a visible role, auditors are the silent gatekeepers, helping organizations build strong internal defenses. Let's break it down. Money laundering and terrorist financing schemes are becoming increasingly complex, utilizing shell companies, digital currencies, and trade-based money laundering. The challenge: many internal audit teams still focus on basic compliance and miss hidden red flags like unusual transaction patterns, weak customer due diligence, gaps in record keeping, or suspicious activity reporting. If ignored, these gaps can expose the organization to regulatory fines, reputational damage, or worse, being unknowingly involved in terrorist financing. So what's the internal auditor's role? First, risk assessment. Auditors must evaluate the organization's exposure to AML/CTF risks based on its operations, geography, and customers. Second, control testing. This includes reviewing the effectiveness of AML policies, training, and internal controls. Third, reporting gaps. Internal auditors must flag deficiencies to senior management and the audit committee. Finally, follow-up, ensuring timely remediation of audit findings. Let's not forget, internal auditors are not investigators, but they are the first line of defense in identifying weaknesses that criminals exploit. Here's a real-world example. A multinational bank's internal audit team discovered that several accounts were approved despite incomplete customer verification. Further review revealed that shell companies were being used to funnel money through jurisdictions with weak regulations. Thanks to the internal audit's intervention, the issue was escalated, reported to authorities, and led to the closure of over 100 suspicious accounts, preventing potential misuse for terrorism financing. In summary, internal auditors play a pivotal role in AML/CTF through the following. 1. Assisting management in strengthening internal controls. 2. Enhancing risk-based monitoring. 3. Promoting ethical awareness. Their work supports law enforcement, regulators, and the global fight against financial crime. Because when internal controls are strong, criminals have fewer places to hide. What do you think internal auditors should focus on most in AML/CTF efforts? Drop your thoughts in the comments and subscribe to the GRC Sentinel for more on governance, risk, and compliance.